Utah's individual income tax is the state's largest source of revenue and brings in about $3.6 billion. When the state first created the tax in 1931, it had quite a progressive structure. However, over time, inflation and policy changes gradually modified the tax to the flat rate structure we have today. As of 2018, Utah will have the 16th lowest tax rate in the nation. But when we look at what Utahns have actually paid, they had the 16th highest income tax burden as a share of personal income. The highest earning 50% of Utah tax filers generate 93% of income tax revenues, while the lowest earning 50% of Utah tax filers generate only 7% of income tax revenues. Admittedly, the lowest 50% of Utah tax filers only receive 12% of all the income earned in the state. We have here a graphic of Utah households distributed by income, with the size of the bubble representing the number of households in that category. In 2016, the latest year with data available, those Utah households were initially taxed at a full 5% of their income. However, many lower and middle income households qualified for Utah's taxpayer tax credit, which significantly reduced their tax liability. As a result, the median tax filer ultimately only paid 3% of their income in taxes. However, federal changes in 2017 and state changes in 2018 will modify this picture. Changes in the federal tax code mean large Utah households will pay more in state income taxes, while small households will pay less. Because that would ultimately generate an $80 million windfall for the state, legislators cut the overall personal and corporate income tax rate to 4.95% in 2018. While state changes will not have a major impact on Utah households, the combined impact of federal and state changes mean higher income households and businesses are indirectly benefiting at the expense of lower and middle income households. For more details, read our report online at utahfoundation.org.